Hey guys, what's going on? What's going on? What's going on? It's your boy MC Fire. We're coming at you again with another live stream on the markets. Today is Friday, and as we kind of dive in, I just want you guys to keep in mind that for trading, please do your due diligence, keep your risk management. By all means, this isn't financial advice. I'm not a financial advisor, but the reality is in today's world, you do need to get financial education from somewhere. So if you don't get it from here, make sure you get it from somewhere, whether that's reading or back testing on charts. But this is a skill that can definitely just pay you for the rest of your life. Having that skill, I'm telling you, is changed my life and has the ability to change a lot of other people's lives around you. Right? It could be the difference between you being able to keep your standard of living or you getting sucked in to high inflationary costs. And I believe those are around the corner. So having this skill and losing your standard of living as a trader is not something that a lot of traders really have to worry about if they can become profitable. And in today's age, with the advent of bots and really good systems, you just got to find a system that really works for you. So I just want you guys to stay encouraged and please make a real effort to grow your financial education, grow your financial education in certain assets, whether it's trading or buy and hold or crypto, gold and silver. Just read, and then once you read, make a decision and mitigate risks. Right? Some people mitigate risks with diversification. Diversification really is just a risk mitigation strategy. Instead of being dependent on one thing, I'm dependent on a lot of things, and it bodes well for risk management. But sometimes you can bend your rules on that, right? You look at like guys like Warren Buffett, Elon, they're really concentrated, but those guys spent a lot of time in knowing what they were doing. So that is just my 2 cents on the day. We're looking here. This is Friday, the 24th, right? And we want to go ahead and kind of get you guys looking at the markets here. So let's kind of dive right in here. So today, January, Friday, 24th, Europe is got like their flash manufacturing PMI stuff. So if you're a forex trader, just kind of watch out. A lot of volatility there. And for the US, flash manufacturing PMI also is going to be coming out today. Um, we're looking at the bar charts as well. Really, I love this tool. This is a really good tool for just kind of seeing where the market rotation is and giving you guys just a snapshot overview as we go into the charts there to just kind of know what's looking at, what's not looking at. Okay, the market responding very favorably to essentially a new administration. A lot of the sectors were looking a little heavy going in, and then post, a lot of the sectors are climbing. A lot of that is due to the fact that Trump had said that he will continue the tax cuts. That's something he campaigned on, and I don't see him uh, going back on that. There's also potentially going to be a trade war on. So if that continues, then trade wars are typically inflationary narratives. Um, when you start talking about access to goods and services, so not we're not going political over here. It's just as I look at economic history and start comparing that to what is proposed, unless you have a plan to source those resources that you're not going to get from the trade war from somewhere else, maybe a more friendly location, or even build those industries out here in the US, then trade wars have historically been inflationary narratives. That's just the way it is. If I can't source my goods and services from a hostile nation, I would have to source them from a non hostile nation and maybe probably for a higher price, or if you produce them internally, probably for a cheaper price. So that could be an avenue that we take there. All right, to the chart. So, as you guys know, I'm a huge fan of the Qs. We made a good amount of money on the rip there, and this rip has already started to push. Now we're already invested in set Qs. We do have also full disclosure a position in XLF as one of the ETFs for the financials. That is continuing to push. We did roll it, closing some and then rolling the others, which was really good, taking a lot of good profits off the table at the first sign of danger. We had our alert at 5086, which was an alert that we put there from this pivot as, hey, this could potentially, once it breaks through that, to complete the weekly rotation, could see some slowdown. So we did take a little off the table before it pulled back, right? So shout out to the XLF trade. Really was kind of a no-brainer once you did the breakdown. But and that was in the Sunday video and Monday videos, and I believe the Wednesday video as well, that we kind of broke that down there, why that's so important. So before we get into the market, we're going to give you our hot takes. We always do our hot takes early, and then we'll go back over some of the other stuff, right? First hot take is you've got Charter. Now, Charter Communication looking like a whole snack here. Remember, we made a massive capitalization on this rip here. The setup fully in play there. Caught a butterfly as well on 100% return on investment there. And then the other part of that, definitely squeezed that out. Now, if you look here, all the sides are kind of similar to that, and the only difference is this one was in no man's land, and this play that potentially is sparking up here is reacting off of this resistance here. So if it's coming down, testing resistance, and then making a push, you're seeing this push come out of this right here, right? This setup candle one, and then setup candle number two, kind of getting washed, and it's already kind of started to push. So the end of it already is a slight pullback. So we probably be looking to get into that today. There is a squeeze on the board. And the momentum shifting already has started to shift to the upside. Unbalanced volume also is green. So Charter probably looking to get that to the bullish side today. Okay. So watch out for that. Might even guys show you that. IBM also something that has already triggered, and I really like this play because we haven't really missed it. There is a slight pullback, I believe, is for that as well. So if it triggered above that 3 trading days ago, it's got a squeeze, momentum shift to the upside, unbalanced volume green, stacked moving averages are tight. The only thing it doesn't have is that like right there off support. But if we're gonna make new highs, it definitely has room to go, room to grow for sure. Going from that 226 all the way up to that 240 is very reasonable to surmise that. You maybe get a triple top. If it blows through that, we could be looking at 3 ATR potentially, right? The only thing I'm worried about is how strong are earnings for IBM, and then once we figure that out, we'll be good to go. We're not going to look at that right now, but that's something we could probably look at on Sunday's video for IBM. We've got Target, TGT, target to the downside. Okay, so the system works basically the opposite direction. You got a downside, you want to buy the dips and short the rips. Well, this is a rip up into the moving average cloud there. Got a setup candle. If we break below that 134.92 level, if we break below that 134.92 level, we've identified the trend, identified an outsized candle, and then you set up the trade according to your risk and what your objectives are. For us, it would be a break, probably a 3-week play, first sign of danger down here into 128. 128 is where that's like our first sign of danger location. It has tested that a few times, 1, 2, and 3, and gone up here. Now, some people might say you're kind of going against the trend there, because it's making higher highs and higher lows, but you got to consider too that markets just don't go up and down willy-nilly. They do change trends. uh, kind of got a mind of their own. So really, it's helping you to make a decision on, okay, if my play doesn't work, this is where I want to let it go, so to speak, right? So how do I manage that risk? Because you're getting mixed influences, right? You got a squeeze. Uh, right now, momentum is shifting on the squeeze. You've got an unbalanced volume going up, though, right? How do you do it? Well, I just easy, simple rule: two bar professional, right? If I don't take this stop right here on the green, I probably will take that stop right there above 145, 140 and 50 cents. If I get that stop, I bent my rules from a one bar professional to a two bar professional, but I'm not breaking that rule. Okay. That's a two bar professional. I'm not breaking that. Now you say, well, it's not this immediate bar, right? That's essentially the same thing, second bar with enough room for it to wiggle, essentially. So two bars, that's it. That's Tarjay. Next on the hot take list, we have SLB. SLB. So shout out to SLB. Kind of a lot more downside plays in the works here. Really liking the look for the downside plays because having all up plays when a lot of the market is can look a little heavy, you can get paid a lot faster on your downward moves if you can catch them. Prime example that worked out really good is kind of bring him to the front of the classroom because it's one of my favorite examples, Johnson and Johnson. What we want to see, your rips kind of to the downside, pulls up a little bit, and then you got a green candle out here on the daily, and then it just falls, and we rolled it like 4 times. It just goes almost like 3 days, falls to the floor, keeps falling, and just boom, 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 boom. Right. So those drops are pretty. If you can catch them, they're pretty sweet. Rips are good too, but it's so often I don't see enough downside plays, and it's good to catch one every now and then. Catch a good old downside play if you can. Hone that skill. Same thing. Lockheed Martin looking a little heavy. Same setup. Now watch out for earnings coming out here. It is already kind of extended to the downside, so this rip. Just kind of watch that and set your risk accordingly. You've got Dominion. We are already in Dominion Energy. A very, very nasty rip to the downside. But there's also another setup candle here. So if that breaks, I'm going to put an alert there. If that breaks, I could potentially see a continuation to the downside. Remember, unbalanced volume is also kind of in negative territory and slipping. So if we get that, and then earnings, let's say earnings are not so favorable, then it could definitely see some more red on the tape there for sure. But the first day, if you guys caught this, I think we took this live. If you didn't catch it, we didn't end up posting that video. We have to do a few edits on that. But the first day, it essentially sold off, right? And then we caught this play, and then that first day, it just ran pretty much straight to the downside there. We'll bring it to the front of the classroom. Okay, so that first, I don't know why this is pulled up. Random stock just jumped in there. Not Charter, sorry. Oh, Dominion, thank you. Yeah, so for Dominion here, first day absolutely fell through the floor, right? And for all my day traders out there, I just want you to know how it fell through the floor so you guys can kind of see it. If you notice, um, we don't have our day trading levels pulled up, but essentially this would have been the end of, let's say, for this would have been a resistance zone right here. This would have been a resistance zone. So now, as it breaks through the resistance zone, you see that large break there, and it fails to get back up into the rotation. You see it kind of going flat. You see it respecting this VWAP here, and then boom, right there is a very good sign that, hey, we're definitely going to go imbalance, because remember, we're already outside of the daily intraday, I should say intraday rotational zone. And because it's in the intraday rotational zone and it's breaking to the downside, You could be a 2 bar professional here. You stopped out at highs that break a view up. You could do that, and then it just kind of fails for the rest of the day. So, um, shout out to the day traders out in the world. We haven't forgotten you. We don't day trade necessarily a lot over here, but definitely still is a thing, right? I mean, we might take a stab at day trading if we can get a good system, but it did kind of pull back a little bit to the upside, and now has since started to continue its way down, I believe. So watch out for Dominion continuing to the downside. Apple, Apple. We do kind of have a buy. We're kind of getting to the point where it might be a buy bias for Apple here. If I can put the ticker symbol in correctly, 2 A's instead of 2 P's. Um, Reacting off this resistance here, especially off of the gap there. But yeah, Apple's kind of struggling here, so you gotta have to watch it. Market just opened, by the way. You got JD mark above, NVO mark above. We can go look at the we'll go look at the market watch, but let's just go pop those over real quick. All right, there's that. So you got Novo Nordisk. Yeah, it's in trouble there. JD, Chinese company there, JD.com, looking pretty good. We might be able to take this. This wasn't in our hot takes, but yeah, JD is looking pretty good. See if we can wait for one of the other hot takes to give us something. If we can get it, maybe. Put JD on the list. Was 24. Yeah. Well, let's watch JD here. Remember, it did break this first one. So these guys on the day are offside. Momentum is shifting to the upside. But a 40 break, 40-21, we'd be getting in a little late there. But if it breaks that, we definitely want to be a buyer, right? Big if in there. And then first sign of danger would be like right here at 42. So we'll go ahead and mark that out for you guys. And then the next sign of danger. Might see us take this bad boy live. If the options are reasonably priced. That's for sure too. If we can get them reasonably priced. Okay, cool. Here are those levels. We'll also put some more levels to the. Well, actually, we'll take this guy. Where are you at? Yeah, it's not gonna be perfect though. Really, there's that, and then it's starting to it respects like this level down here. Super weird. Kind of like breaks its own support and resistance level. Okay. Sweet. So as you notice, like every morning when the market opens, the hot list kind of resets there. We have our notepad pulled up, so nothing to fear. The notepad is here. On that, yeah, JD is a Chinese company, and one that Michael Burr is putting on his watch list. So we kind of borrow other people's watch lists, and we copy other people's homework, but then we trade it our style. So we might not get the like super bottom of the barrel pickup, but we can definitely catch these swing plays. And that's the cool thing about being a swing trader in general. You kind of a life hack into, well, you're in the action, you just don't get it all the way at the bottom. A lot of the hedge funds, they have a lot more information than you do. So getting certain looks before you get them, definitely a thing for sure. If you look at the top banner there, you'll see that Q's kind of struggling there. ES is doing okay. It's up like 0.02%, right? I don't know if that's good or bad. So market coming in a little neutral, a little undecided. You've got XLF sliding a little bit, XLC pushing a little bit, and XOK pushing a little bit. So yeah, we'll just have to wait and see. Also, you get a little bit of a mixed bag, gold pushing and CL pushing. So let's go take a look at those, see how much we're talking about for all of our gold bugs. Gold bugs, yeah, gold pushing. So definitely liking that. Remember, there was a setup candle for gold here, and it has since pushed above that. So I am a little bit of a gold bug. I do like we do have not here obviously, but in a vault. We do have gold holdings, and I encourage people to get gold holdings. It's a good hedge against inflation when it comes to protecting your buying power. Now, again, this isn't like a treat the gold like insurance, okay? And treat it that's how you treat it, right? It's not like the pledge is gonna make you rich. I mean, it could, but it's really to protect your buying power in case of very heavy inflation, which could potentially happen. There's a lot of inflationary narratives on the horizon. So just kind of keep that in mind. We kind of already saw like how that can affect people's bottom line. We're gonna go look at CL. CL2, same thing with the recent comments from the new president, drill baby drill. What that really means to me is unless you isolate parts of markets from sources of oil, if they still have their sources of oil on the market and you're adding your source of oil to the market, right, the price is probably going to drop, and you're seeing that reflected here, right? If you give them unfeathered access to federal lands to drill and you give them unfeathered access to build up your oil reserves, then guess what? That means that you're going to be able to, sell pretty much. It had a pretty good rip, and then you're seeing the results here, right? So it was already in a downtrend, had a nice rip, and then some failure there. Let's go back and look at some of our none of our major plays did trigger there for right now, but we'll go ahead and take a play in IBM there because it did pull back, and probably Carter will show you guys that here in about two shakes of a lamb's tail. We'll see if what else triggered. So you got uh, the Dominion triggered below. We'll take a look at that. We'll also look. Oh no, it didn't. It's active. It's active. Sorry. Let's see what actually triggered. OKE, Lockheed Martin, and Apple. So OKE, Lockheed Martin, and Apple. Let's look at that. Yeah, OKE, slightly pulling back. We went on and closed that as it pulled back a little bit more than we'd like. Apple, we already closed that. Apple, ooh, why can't I get Apple today? Jeez Louise. So yeah, Apple, go ahead and we can almost set that up for a call there. IBM, there we go. That's what we were looking for. That IBM. Yeah, we want that. We want that first. So let's go into the trade tab. 28 days out is pretty good. We're on the call side here, and then we'll take the 50. We're going 50-20 like we always do. 50-20 buy for three, essentially a month. There's a buy, control hit. There's a sell, and then we'll go ahead and take it at the best. We'll give the market a little bit. Let's put it at the mid. We'll give the market a little bit so we can go ahead and get filled on that. It doesn't have to be. We're not giving it too much. Yeah, see if we can get filled on that. And you come out here, and we'll see if we can get filled on that pretty quick. We're gonna try to force the issue there, so we might be in the monitor tab if it doesn't get if it doesn't punch us in there quickly. You see it generates up here and it says, hey, you guys can you have an order out there at 608 on the limit. We don't want to do a market order, don't want to do that. Probably should though. Let's see. Don't see it really why are we going so the mouse is wonky today, man. The mouse is definitely wonky today. And we're like slight latency issues as well. So it didn't fill us. Let's go back to the monitor tab. We'll go cancel and replace order. And then let's see what it's up to now. Oh, it's down. Okay. I'm very interested why it didn't fill me. That's good. Maybe get at a discount. saying having some internet server problems. Our latency is good, I believe. We don't want to miss this because of latency issues. I don't think it wants to let me in. Yeah, we've got a buy on there. It just hasn't filled. I fill my order. It's saying we have latency issues. I don't know about all that. Okay, we'll let it stay out there in the ether. We're gonna look at the other one. Apple. Maybe we'll fix that with the Apple buy. 28 days out. 28 days out. Apple. Good old Apple. We'll do 35. It's a little too long. We take the buy, and then let's say we also do the 80-20 here. It's around the same price. So the Apple filled. Maybe it's due to what's it called? There not being that much open interest out there for that bad boy. But we'll go ahead and kind of tell you kind of what it looked like here at Apple, and we'll dissect that. Yeah, I'm not too sure why that IBM hasn't filled yet. I'm not looking to kind of push it to market. Probably could to get it instantly filled. I'd be interested to know what that would look like price wise. I'll go put that as green. Sweet. So if we're looking at it from a slightly biased perspective, you already got the momentum shift yellow on the histogram. That's a good sign. One of many. You also have a gap here. No break above this candle right here because that's what we were looking for originally. But once it gapped and then it immediately started to take a buying perspective and reacting off this level here of the 220 and 50 cents, then we were a little bit more apt to want to get into the upside there. Apple is in an uptrend, and any opportunity to get into Apple for a play off of this pretty massive sell off and then massive volume getting in as the party is kind of late and well in full swing would be a great idea to go ahead and do. Especially if these people stacked in and haven't received essentially any pay, like haven't got paid. So psychologically, they're in a little bit of a bind there, and we're gonna look to capitalize on that. You got IBM, which we haven't got filled yet, which is kind of crazy. So we go back to the monitor tab. How much? Like what's crazy is to me is Oh, wait, I guess it did fill. Sweet. It did fill. Nice. So IBM filled. What time did you fill? So IBM filled at 6:08, which is pretty good. And it said it filled at 6:37. So we're gonna go back over here to the charts here. 6:37 candle, just to get it good continuity. I guess we just didn't see it fill, maybe. There you go. So essentially that around there, that candle on the buy there. And we'll go over the targets for that. What's the target for IBM? What's the target for Apple really quick? So IBM, 2-bar professional, we'll go ahead and stop out if it crosses below the low there. Crosses below the low. Remember the setup candle is that red candle up there. So if we do 2 bars back from that, like respecting all of our buyers kind of deal. But I really don't like to do the respect 2 bars if you've already got a pullback between your setup candle is already a pullback and it breaks to the upside. I just like to do respecting all your buyers. Now, if you get like to say this one just immediately broke, which it did, but those peekaboo breaks, tell you guys to watch out for that. The peekaboos, and sometimes if it goes back under and it pops back above again, you could take the second break of that setup candle. Little nuance there, but I like it. So that would be my stop out. They're a little tight, and then we would look to have it test that high there. So we'll put the alert a little bit in front of the high. You kind of want to be Johnny on the spot there. If you look on this chart, the preview chart, I'm liking what I'm seeing. So what you have on there is this basic 21 and a 200 period moving average, and I'm really liking the fact that it's kind of crossed above its 21, crossed below it, and then now crossed above it, and you're looking at what seems to be an ascending triangle, right? So a really good look there, and that's why we're extremely bullish on IBM there. Um, and then for Apple, so those are my stop loss and my take profits or make decision making points essentially. Apple, kind of same deal. We want to respect all of our buyers, so we're giving it all the way to your setup candle, at least respecting your setup candle and your buyers there, respecting all your buyers there. Boom, boom. And where is the first, literally, the first sign of danger is here, right? But ideally, here is where we're going to be looking to maybe roll or make a decision. Okay. And also bringing it to the front of the classroom. This pause, coincidentally, not just at the level, but also intersecting with, we're looking at the preview chart here, crossing. You might not be able to see it, but it's reacting off that 200-day, 200 period moving average. So very, very strong level for support. And when it intersects a support level, you could potentially, if it's going to stay in bullish territory, it'll stay above that 200 for the most part. So and you got earnings coming up, which historically earnings have, there's been some slippage at the last couple of quarters, but we'll see if it holds through there. Now we want to get some. Let's go check on our downside play. We'll go look at Dominion there and see how it's doing. Kind of slightly taking some heat on the rolls there for the Dominion, which is totally fine. Remember, uh, we're gonna move this up to kind of break even there. So let's see, kind of right there, boom, cannons and confetti. Replace that there. Just so the ones that we sold out, even if they get up there, we won't take too much heat on that Dominion play. But definitely, I've already covered our risk there and took some nice profits off the table. So it's only good as long as it doesn't gap above that and all this other stuff. We're fine on that as well. We can look at XLF. Remember, we have a bullish position in XLF. Um, Not too much action out of the market right now. I mean, you see it kind of take a little bit of a dip there this morning and then kind of rallied. So these super volatile moves, like that, violent moves, they're good for people who can capitalize on those kind of day trades if you're looking for. And I want to bring to the front of the classroom, look at yesterday and then look at kind of today, right? So if you're you'd be really happy if you were a trader that had this already queued up potentially, and had your hot button set up and all this other stuff because it could react rotationally. See how it's neutral and then it's kind of just rotating. There is ways for you to capitalize. Let's say if we bring this to the front of the classroom, you see your red candle, hammer candle here as it crosses above, take the buy if you believe it's rotational. First decision making point, VWAP for sure. Don't really see any other major setups there. One of my favorites is you get red pulling into VWAP, like right here, and then immediately there's a green. You take that buy, stop out below. Now you do get stopped out, but yeah, because it doesn't really go anywhere. So a lot of times that reacts pretty favorably, and if it doesn't, you'll know pretty quick, right? red coming into VWAP, and green immediately buying right after that. If there's a follow-on candle, you most definitely take that for continuation. But remember, the whole day it's been neutral. The whole day it's been rotational. So taking this versus taking something like this, um, taking this is a lot better, right? You see it come up, respect its two standard deviations. As you start to get this green candle, 1, 2, 3, 4, 5, and it starts to fail, you can take the sell, stop out at the high. They're respecting all your buyers, and it pretty much fails back to be well. So rotational plays are in effect, and that's going to be the hard thing for day traders, is being able to have your playbook kind of queued up already, number one, and then number two, right? Have your playbook queued up already, number one, and then number two, identifying whatever market you're in. Are you in an imbalanced market? Is there potential for imbalanced market? What are the signs for going trend, essentially? Or are you in a rotational market? Are we balancing between support and resistance? Two standard deviations, or what have uh, uh, prior price action, whatever you guys delineate as support and resistance, right? There's different strokes for different folks. But if we're going to be a day trader, just a lot of work that I think you could better use as a swing trader with thinking like the same methodology, essentially. So just keep that in mind. We can go look at other in plays, like we'll look at Johnson see here and see how it's spooling up here. No trigger as of right now, but we definitely want to, like, there's a this right here. So like you saw Johnson um gap and go yesterday, or two trading days ago. But then while we're coming back and looking at it, is there was a setup candle down here post earnings. So it wanted to see how it reacts. It comes up here. It is getting rejected from the moving average cloud as of this morning. So not a heavy rejection, but enough to be like, oh wow, we just want to, as a case study, learn this and see how it goes. We wanted to ideally take this play to the downside, but they're just gapped. So we're not looking to chase it. Would have probably taking some off the table at the low there. Very similar to the way we did at Dominion. Some of our plays, they get really good. They just kind of run, and you make a decision in the first day. It's a good time. So we kind of got that a couple of days ago, and then the whole day just ran to the downside. We took profits, and we're like, okay, well, if that's what you want to do, we got a lot more time on it. But and there's a lot more space too. We just got to let this kind of play out here too. If it goes to a 3 ATR, could do, might not do. Also, next sign of danger. We could put that on the charts here. So next major sign of danger, you could put dislocation right here. Put these levels and bring them to the front of the class here. Boom. That's your next sign of danger. And then really beyond that, let's see here. Got a couple touches here. Boom. Nice. So major signs of danger right there, right here. The reason why I bypassed on this guy is it's just a one touch. So there might be other touches out to the left, right? But if I'm going from left to right here, I get two touches in this general vicinity. And then if you look a little bit more to the left, it is more prone to respect that level. So I'll go ahead and I'll extend that out for you. Yeah. So that makes a lot more sense to me than this one touch, even though it's a major pivot. It's a major pivot inside of a rotational zone. So almost fair value, right? Almost fair value. A lot of orders being built here. And so if the market pushes, it's basically like it's bouncing off of a VWAP, so to speak. So don't see that. Yes, it's a major pivot in no man's land, but this gets multiple touches, multiple touches. So resistance and support is a lot more established at this other level at 46.59. Just in my methodology, right? You guys mark it however you can still put that on there if you want. Yeah, that's the way it is. Um, One thing about me, I love charting, and I love looking at charts and seeing. For me, it's simple and it's therapeutic, right? Something that is kind of like a plant that grows. You set it in the ground, you set it and forget it, and you just watch it grow. And it's the same satisfaction as watching maybe kids grow, or the same satisfaction as watching if you've ever planted anything, or if you've ever developed like as a any kind of discipline like a musician, and the satisfaction of maybe a couple weeks ago you didn't know how to play a piece, and then later you're playing it from memory, you're playing it with your eyes closed, and you have the opportunity to enjoy it. That's kind of how the trading journey has kind of been for us, has been just being able to enjoy this is pretty cool. So you get the cues pushing here now, and this is pretty powerful push, because not only did it react off of two standard deviations, let's see if it reacts on the high side against it. Right, that's already kind of you got a double green here, nice pullback, and you getting some red where you're crossing above that, and kind of pushing to the upside. If you're looking at our levels here, watch out for the high at for rejection potentially at 533.82, right? So if I have my daily levels plotted out, this would definitely be on there, and it's something to watch, right? Ideally, you want to see it break, retest that level, break that level, retest it, and begin to push away from it, right? With that level being there, just looking immediately to the left there, um, watch out, definitely watch out. And then we go back to the weekly chart where we see red line up there. So yeah, but you're approaching, getting close to relative all-time highs. Now, full disclosure, we were selling the iron condor. We did sell the high side one, got rid of it, but the low side one is still on and popping. So we didn't get that in the Qs. We got that in QQM. At We were selling selling these puts here, and it's since pushing away. So those are definitely in profit. The ones at the 225, it's getting a little too close for comfort. We were like, we'll just go ahead and sell it there. So selling some contracts, buying some contracts. It's a good time. What these lines are here is to kind of illustrate the level of pullback, right? So there's a shout out to one of the guys that we used to watch for a long time, Oliver Velez, really good trader at making things super simple. I really like his approach about the 20 to 200. He's like, if you can count to two, you can be a trader. There's green, there's red, there's buy, there's sell, there's calls, there's puts, there's two moving averages, 21 and the 200. If you can count to two, you can trade. One of the things he illustrated, though, is the amount of pullback. And I really liked it because it made me visualizing it's another sign of caution, right? So when you see a lighter pullback, right, continuation is on the break. If you trade, trend lines, strong continuation, the shallower the pullback is more likely. So here, this trend line angle isn't that strong, right? It's kind of more kind of neutral. So continuation is very strong if it breaks. Same thing here. Trend line break is strong. Not trend line break. The trend line slope is not so strong. So a break of that continuation is highly likely, right? Now you see this one, uh, trend line break is, or a trend line is steep angle. And so as the pullback also is very steep. So continuation, it comes up major fail before continuation. Right, major fail. This could break down too. Like it doesn't have to continue. So multiple more weeks to get back to those highs there. Multiple more weeks to get back to those highs. Like to get back to high, maybe it took 1, 2, 3 weeks, 3 weeks to get back to highs, went neutral, and then continued. And then from here to get back to highs, it roughly took like 2 weeks to get back to highs, right? Here it took multiple weeks to get back. Now this was obviously a bigger rip, had a bigger pullback. That pullback happened in 1, 2, 3, 4 weeks. That pullback was 4 weeks, very strong. So going from that back to highs, 1, 2, 3, 4, 5, 6, 7, 8. That's kind of the point we're making. How much more time is it going to take it to get back to highs based off the level of pullback off the trend line? So I hope that to you guys technically was a value add that we got. It's not my own look back. That's Oliver Velez. Shout out to him. The angle of the pullback is super important. Okay. Angle of the pullback is super important. So watch out for that. Um, we can take a look at one of the other. Uh, ooh, let's go check up on. We already checked up on USO. Let's go check up on wheat, and we'll go ahead and call it here. Good old commodity play. Um, yeah. So it's kind of getting close to that bad boy. Nice little rip in wheat here. Nice little rip up, and then here's a setup candle. Now I think we did. It was either wheat or another one. We called out that hey, this could be a sell. I think it was SLB or something like that, where it had the same structure and it ripped, and then you have this. We were thinking about taking the play on the red as opposed to break of the green. It might have been SLB. Let's go look at that too. SLB. Yeah, it was SLB. So we were taking a look. We wanted to say, okay, um, you got earnings, it happened, and then taking this play on the red, so to speak, as opposed to the break of the green. It is there, kind of respecting that. But that first day just went boop. Nice juicy rip to the downside, like a 3-day play, $3 play, excuse me, on that that we were considering taking. We're like, yeah, let's just see if it'll break the green. If it breaks the green, there's not going to be a lot more downside anyway. It isn't a downtrend, so we want the bigger play, right? But technically, right, to mitigate your risks, if you take it earlier, your risk is very small, and then your reward can get you increase your reward. So you make your money on the buy. You don't make your money on the sell, right? We increase our risk here a lot more because our stop for to be justified if we're 2 bar is up here. You have to respect all of these buyers. You have to respect them according to our rules. So here we only have to respect these buyers. And we're like the early adopters, right? So something to watch there. Uh, and seeing stuff like that and explaining it helps you talk your way out of some trades and be like, do I really want to take this trade now? I don't know. I don't know if I want to take this. So look at that. We gonna rear its head now. We were just looking at it. We Yep, so there it is. There's a break of that. As it stands, we could take that down to the downside there. Let's see if we can. Well, also, is this one better? Which one? Get a well coming. We got 2 up play. I think this as well as a push to the upside. Yeah, look at that. That's pretty juicy. Now, the only thing I don't like about this is where it is and how much it's already moved. Ideally, you'd want these setup candles to be down like right here. And it's already the squeeze is already kind of fired off there. So a lot of momentum has already been spilled in that play. Doesn't mean there's not more room for upside. It's just, we need a couple of down plays as well. This is what I was talking about. This is a prime example of that peekaboo, right? It comes down, sets us up, and then what does it do? Immediately starts to pull back. So what a lot of times I do is I come back in here. I like, okay, now if you triggered my alert, and you started to bounce. Okay, cool. You want to bounce, that's fine. But if you come back and break it, now there's a higher probability with the setup and the double top, double break is a lot more likely. So some people will take the break and then the retest and then they'll take it. That's totally fine too. But if you take the break, a lot of times if it comes down and touches it again the second time, you're not peekabooing me, and I have a lot more confidence that there really is a lot more selling pressure behind it. So that does happen a lot, believe it or not, guys. That's why I'm telling you, you get peekabooed. That's why we even have a name for it on the channel. Is peekaboos comes in, hey, I'm here. You get in, and then it starts bouncing on you. You can watch that for a false breakout. Oh, the YM is struggling. Let's go look at that. /YM. Good old Dow Jones. Oh, it's not struggling by a lot. But look at that too, right? Another thing. Major indices, right? Major futures You see that setup candle right here? Yeah, break, run, juicy. Break, run, juicy. Right? We really like taking setup candles on major indices. I'm more of a Q and a SPY guy, but yeah, the Dow Jones, looking at that and they set up candles and rip to the upside off the break, even follow through a couple of days, 1, 2, 3. At the first sign of resistance there, you take it, you make a decision, it pulls back on you, that's fine. This one is ideal. This is what you want. This one going into fair value, I call it fair value gap, and ripping into the other fair value gap. This is kind of what you want to see, right? We already did something similar on that on the Qs when it does stuff like that. It kind of did it right here. We're already exposed to the cues and did it right here. This is kind of what we want to see. Come down, respect resistance, multiple days of follow through, breaking this level and then just ripping, right? So Dow Jones, shout out to it. And we're going to look at the Russell RTY there. So Russell, not as kind, right? Remember, the Russell is our IWM, canary in the coal mine there. IWM, we have more plotted on the IWM, right? Canary in the coal mine, getting above that level where I kind of told you guys, yeah, this has a lot more potential to be heavy if it can't break that. But I'll consider the market to be like out of immediate danger, like major sell off, total catastrophe, power change, and everything implodes if the IWM can get above that level, which it did. So I believe that we're good to go. Now, this level is still in play here because it comes in a retest this level and it's still flirting around with it. So IWM would be nice for it to, sorry, excuse me, would be nice for it to kind of continue and kind of flowing a little bit more to the upside, just a little bit. It doesn't have to stay like right here next to our uh, go no go zone, but it's out of the head and shoulders pattern strata. So that's what we're looking at. But guys, thank you so very much for tapping in with us, and we'll be back again for our Sunday video. So stay tuned for that. If you didn't get an opportunity to watch the last Sunday video, definitely go back and watch that. In the 26-minute and 22-second mark, we did tell you guys about Netflix, and so if you guys were watching. What Netflix did, you had an opportunity to get into it. Yes, it was earnings, but we told you guys our very first hot take of the day uh on that show. And because of that, definitely go back and look at that Sunday video and how I broke that down and what you could do even playing on earnings. So definitely check that out, guys. This has been fun. We'll tap into you on the Sunday video and look out for next week. Have a good day.